Hey everybody, it's Hussein Kabani, your favorite broker, and I'm being joined by...
Hey, it's Bakar with Team Kabani and Remax Rouge.
There we go. All right, so we actually have been digging around and looking at different types of product that's on the market right now because it's kind of slow, as you guys probably already know from all the market updates that we do. Sales are kind of down, so it leaves us some time to kind of explore the market, figure out what's what. And we've been kind of exploring a little bit more of the pre-con. Because we want to, and we're getting more of these developers that are actually reaching out to us now and saying, hey, like we have all of these incentives and programs and we're going to pay you a lot of money to sell our products. So, you know, it's kind of interesting to say, hey, like, why is this happening? So what is pre-construction?
So with pre-construction, you're purchasing a unit today that's not built, whether it's a townhome, a condo, or a detached property, directly from the builder. It'll be built over the next 2 to 3 to 4 years. And that's when you'll get the keys. So essentially, you're purchasing today, and you'll get the keys in 3 to 4 years.
I mean, that would be the whole goal.
That would be the whole goal.
Yeah.
So,
and it was possible in the past.
I mean, it was possible in the past. There was a time in pre-construction where you could actually walk into the builder's office and buy a pre-construction unit that was around the same price as a resale unit that was on the market.
Yeah.
So it was a good tool for first-time home buyers to get into the market. And it kind of shifted during the COVID boom, and we're going to get a little bit into that, what happened and what kind of pushed that shift.
I mean, even just like a real life example, like I was in that situation where I think it was 2015. I had in Duffin Heights in North Pickering, I had a back-to-back Mattamy townhouse that I listed. And we were selling that for, I think, around $370,000. But the night before that, I actually stood in line at the Seton site, just a little bit north of there, northwest of there. And I stood in line to buy the same townhouse for like $340,000. We were in line for like 30 hours or whatever. But yeah, 340, whereas we're selling this resale for 370. So you're automatically like, dude, I'm getting it cheaper than what the resale market is right now, and I still don't have to deal with it because it's freehold, like 18 months or 24 months or something like that, right? So that's how, me personally, I got hooked onto pre-con.
Yeah, so I mean, for me, it was that a lot of my generation, they took their first step into real estate with the pre-construction condo. You know, the guys who are now living in detached properties, they kind of followed the ladder. And the ladder for most people started at that pre-construction condo, built some equity, moved to the townhome, built some equity again, and then move over to the detached property. And then in the last few years, we've seen where the pre-construction has become solely an investment tool.
Yeah.
You know, it was always like that. Real estate's always an investment. Sure. But in the past few years, it became
you got more people into it, right? Because of the profits that were there. So you attracted a different type of audience at that time.
It became a quick flip. It became, people started thinking that, hey, you know what? I can buy this pre-construction unit today. And within 3 to 4 years, by the time it's built, I can flip it and make a quick $100,000, $200,000.
Well, even then, like we were talking about it yesterday, it's like, you know, you were even being told when you were being, you know, agents were selling you these units and saying like, you don't even have to actually close on these things, right? You're going to flip the paper and make money on the paper itself.
And honestly, I hated that strategy.
Right.
Because all I see, when I hear that, all I see is risk. You know, when you're telling a client, hey, you should purchase this pre-construction unit, you don't have to close on it. And then 3 to 4 years down the road, that means I'm guaranteeing you an increase in profit. Yeah. And then just flip the paper to somebody else, and there'll be somebody there to buy it.
Yeah, that's a risky move, right?
Yeah.
But like even with pre-con, so like what ended up happening is that we saw where it was at the same price or lower than what the resale market was. And then we actually saw the resale market start to change, right?
Yeah.
So we saw the resale market start to change and the inventory start to tighten up on the resale market.
Yeah.
So we saw the inventory tighten up on the resale market, which actually started to shift some people over onto pre-con. Because what would happen? You would be, I remember times of being in my car, before COVID, being in my car, and there was like 12 agents on the street. Like there was one time someone called the cops because they're like, there's BMWs, Audis, Mercedes, like what kind of drug deal is going on over here, right? Like, so someone actually called the cops and the cops showed up. Yeah. And like, what are you guys doing? We're trying to buy this house.
Well, you know, at that point, like I was saying, you remember every property was getting 15 to 20 offers, right? So imagine you're a buyer in the market, you're going out, you're active, you're motivated. You're submitting offers on multiple properties and you're losing out because there's 15 other offers that you're going up against. Yeah. So that frustration builds up. Right?
And you're already looking at the price and you're like, okay, listed is $699. I'm gonna pay $950,000 for this property. You know what I mean? And you get frustrated. You put 20 offers. Sometimes we work with people that were putting in like 20 offers and we weren't getting any of it. So they just get frustrated and they're like, you know what? I'm gonna just go and buy pre-con because I don't have to. Argue. It's a set price. Yeah, it might be a little bit more at this point right now, but by the time we come ready to close, it should be market value at that point.
Yeah, and at that point there was a slight premium on the pre-con. Like there was a premium there, and then I think it kind of grew from that point because
as we saw the resale inventory come down,
because we were at all-time lows
Yeah.
with resale inventory,
Yeah.
right? Like in historic records that
Yeah.
we have. When that happened, I think builders started realizing that hey, there's not a lot of supply out there. There's loads of demand. You know, we're selling.
They
our
had them
units.
line up outside, man. Like I know a group of people that rented a U-Haul truck and basically waited outside of a sales center, and they all like played cards and whatever in the back of a U-Haul truck all night.
How many videos did we see of people who were pitching tents
Yep.
and staying all night in minus 10-degree weather
Bro,
to
even
get a
in some
unit?
cases, people selling numbers. They just lined up just so they could be like, yo, you want to buy my spot? $5,000, 10 grand. Yeah, to buy my spot in line.
Not a bad investment strategy.
Hey,
huh?
like, I mean, some of those people actually did better than the people that actually ended up buying the units at this point.
And you know what? Like a lot of people kind of go at the builders for that price increase in the pre-construction. But like me and you, like we're in the business, so I think we understand it, right? It was basic supply and demand.
Yeah.
I mean, at that point, there was no resale inventory out there.
Yeah.
They realized that, hey, people are looking, there's demand. You know, we can increase our prices and sell at a higher rate, and we'll still sell. So I think it was a no-brainer for them.
Bro, but it's on the people. You know what I mean? The thing is that I remember driving through Seton, and I see a massive lineup of people that are ready to buy 15 houses that they release, and there's 100 people there.
Yeah.
And you're looking at the prices of what they're offering and what the resale market is. And I actually was in my truck and I did a video and I said, look at these people. Like, these are the people that are going to be complaining afterwards that I paid say $1.7 million for this, but now it's like $1.4 million. And that's exactly what ended up happening. So I think it is a emotional thing at the same time, but it is still an investment component. Like you have to know how much you're spending and does it actually make sense?
Well, who do you blame for that? Do you blame the purchaser, the buyer, or do you blame the realtor, or do you blame both? Because the way I see it is,
if there was a realtor involved, I blame the realtor and the client. But I blame both of them. But you know what? Even if you're working with a realtor, you should do some of your own due diligence. You should understand the market. At least ask the right questions to that realtor, right?
Yeah.
Hey, similar property in the similar area, what is it selling for right now? Understand the basics of what you're actually getting yourself involved with. Because at the end of the day, that person's going to be out of the situation and you end up dealing with the financial commitment that you've signed your name to.
100%. We just spoke about a time where you can buy pre-construction at the resale market.
Yeah.
It made sense.
Sure.
You're a first-time buyer. You want to get into the market. You can buy this thing today. It's going to be ready in 3 to 4 years.
Yep.
You're locking in today's price. You can save your down payment, your deposit over the next few years, and then eventually get the keys and move into the place. Then we saw the shift where the resale inventory came down. Builders raised their prices, supply and demand. I get it. It made sense, and people did it. But now that I think we've started noticing that things have began to shift again, right? It looks like the builders have now started to realize that the market is not where it was.
Yep.
And I understand, people think that the builders are just hungry for money and profits. But at the end of the day, there is other things that are involved. There's building costs. Building costs went up.
Development fees, the
permits,
cost of materials,
licensing, everything. But at the end of the day, it looks like recently we're getting to a point where that gap is starting to close a little bit. And I think builders are starting to get back to reality when it comes to their prices on pre-con. We're not quite there yet, but I think we'll get there pretty soon.
But also the other thing is that I think that, I think that they were asking a lot of money for these units, and now they're starting to come back down on the pricing. And I think part of it is also helping them is where we are economically right now, right? So the thing is that there are a bunch of people, I have a client of mine that's a drywall finisher, and he basically works 5 days a week, 10 hours a day, and he's basically been told, we only have enough work to do 4 hours a day at this point right now, right? So what does that happen? As the demand on these trades actually goes down, and these people still need to make money, well, the cost of that is going to come down. Before, dude, you wanted to add a pool to your backyard, 35, 40K,
Yeah.
COVID, 120K.
Yeah.
And now we're what, down to 70, 80K, something like that?
I know those numbers well because I wanted to add a pool
Okay,
in
there
my
we go.
house.
But you see, so I think that's a similar thing. So I think the builder is able to offset some of the pricing, and of course that there was the price was inflated, and they were getting that money. And if people are lining up at your door, like, what are you going to say, man? You're at the end of the day, you're in the business to make money and make as much profit as you can. And if someone's willing to line up and throw their money at you, it's
Yeah.
like you'd be dumb not to take it at this point.
It just made me think like the mindset of an investor when it
Yeah.
comes to real estate. Like, you know, for example, that you're lining up for a unit that the builder's selling for, let's say, 700K.
Yeah.
And you know that the resale market, you can get the similar unit that's 1 or 2 years old
Yeah.
for 600K.
Yeah.
So you're paying a $100,000 premium
Yeah.
to get the unit from the builder,
Yeah.
and hoping that in 2 to 3 years, number one, that your pre-con raises 100K to break even, and then further appreciation to make profit.
But you know what you said? You call these guys investors, right? But what I look at them as, and it's going to sound bad, but they're amateur. They're not investors. Everyone thought that they were an investor, okay? Because you bought a property in like 2012, and in 2016 it went up like 35%. So you're a accredited investor. It was nothing to do with you. It was just the market, right?
I'm saying, we saw stories where, somebody purchased a house in November,
Yeah.
Closed in December.
Sure.
November, closed in February,
Yeah.
held the property for 1 week,
Yeah.
put it back on the market,
Yeah.
sold for $250,000
Yeah.
more. They had the keys for about a week and a half, and they made $250,000. Do you think that guy knew that he was doing that?
Not a chance.
And that's the market, right? Like that's when we always talk about
But
timing
that's
the
where,
market.
but I think that's where it got dangerous, right? Because this guy did it, and the guy looking from the sideline is looking at it and saying, "Man, these guys are just making money hand over fist, like making 50 G's, 100 G's. Like, I'm going to get in. I'm an investor. Like, I have the money. I'm going to put it in."
Yeah.
But then you didn't actually do the math correctly, right? Like, you didn't actually look at what you were actually buying. Like, I think to have that big of a delta, like I remember when Mattamy Homes was selling in that Seton area. Not even Mattamy, but a lot of those older builders were selling up in there. But they were asking like, $1.8, $1.9 million for these detached double car garage homes. And at the same time, I'm looking at like West Pickering. In my opinion, it's a more desirable neighborhood, bigger lots, like more mature kind of neighborhood, but even still with newer properties. And they're selling these properties for like $1.75 million. And I'm like, why would you buy a 36-foot or a 40-foot lot over there in that, like so far away in a completely different type of community for that high of a number? If I had a budget to spend like $1.9 million, I think the smarter decision would have been to buy something off of Fairport Road or in like West Pickering.
I mean, do you think that
Because it was a proven thing.
Do you think that
time.
do you think that the reason that people were leaning towards that, do you think a big part of that was a deposit structure when it comes to pre-construction?
It could have been the deposit structure, right? But that's the other thing that kind of gets you roped into it. And that's why I start to say is you're not a real investor. You know what I mean? You're just trying to say, hey, how can I kind of just like ride on the coattails of this thing? If you're a real investor, you would have broken down the money, the numbers. And see, what I want to look for is a proven history of like how this thing has worked. Of course, there's going to be up and downs in the market. But when you look at an area that has a lot of history and you can see the proven sales of it, I'd be more inclined to go towards that. It's just like when we're doing a comparable on a property, like I want to try to find the closest house in the closest area, the closest year built, the closest finishes to that property. I'm not going to take something from Ajax to compare it to Pickering, right? And I think that's a comparison a lot of people were drawing and saying it has to go there.
Yeah, I think a lot of people got caught up in the FOMO at the time. I mean, because in that time we saw that properties were jumping $100,000 a month in value. Yeah. And it just wasn't sustainable.
It's not.
But the weird thing is the conversations that I was having with people, most people thought it would last forever.
Yeah.
Like I would tell somebody, hey, this property's $1 million and the last 3 months have been crazy.
Yeah.
100K, 100K, 100K. Are you telling me in the next 12 months by the end of the year, this $1 million property is going to be worth $2.2 million? And you'd be surprised. The responses I got was, who knows? Maybe. It's like, and I was like, do you think prices are going to go up 100K a year forever?
No.
And it's the FOMO. When it goes that way, people think it's going to happen forever. Look at the scenario that we're in right now. Prices have been dropped pretty drastically over the past few years. They're kind of flat right now.
Sure.
And most people I talk to now have the opposite mindset, where you know what, we think that the prices are going to keep going down now for quite some time.
But you see, that's like that again comes back to me and says that you're not actually evaluating things correctly, right? Like you're actually moving based on the market. That's like me. I know nothing about stocks. I had this one guy said, okay, you should buy, what was it called? Neo. Neo. Oh my God, buddy. I dump a bunch of money into Neo because this guy, like electric car company in China, like it's going to go sky high, whatever. I'm like, okay, you know, jump onto it, the damn thing. And for the first 2 weeks, it's like up, 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 up. And it's like, boom, I lost 95% of that portfolio.
Wow.
Because the thing is that I'm an idiot. I wasn't a stock investor. I didn't research it. I went on someone's hunch of it doing that, right? So I think now people, if you want to still kind of get into real estate, and we were talking about this before, I think you have to look at it as a utility first. Like, hey, what is my purpose of actually buying this real estate? You know what I mean? And we have to talk people out of it. And they're like, oh, well, you know what? I think things are going to turn around. I'm going to be able to sell it in 3 years and make $100K profit. I'm like, I really don't think that's going to happen at this point right now, right? But people do have that opinion that it could still happen.
I mean, we've seen crazy spikes in the market.
Yeah.
And who's to say it might not happen, right?
It could, but I'm not hedging my bets on it.
And I wouldn't either.
Yeah.
And the way we preach real estate is we tell somebody, hey, if you're going to buy this, whether it's a resale, whether it's pre-con, if it's an investment, and solely an investment, hey, we're preaching long-term here.
Sure.
We're preaching, hey, you're holding this thing for 7, 8, 9, 10 years, because in 1, 2, 3, 4 years, you're going to see a lot of ups and downs in the market. But once you zoom out of the chart, like we've heard this a million times, and you look at the 10-year, the 15-year, the 20-year, the 100-year, we have a 7% annual growth every year in the history of the GTA.
Sure, and it goes down, up and down. But you know what? This is a good segue. So, like, where are we at right now with pre-con?
So, I mean, right now, what we've noticed is we've been able to somewhat negotiate with builders when it comes to pre-con.
Which was actually negotiate.
Like actually negotiate. And you know, people always talk about incentives. Like when the market wasn't doing well and the pre-con was priced relatively high, we saw things like, hey, we'll give you a car if you buy this unit. We'll give you a Rolex if you buy this unit. And to me, that was like, it sounds all great, but if they're willing to give you a car or a Rolex, you're definitely paying for it.
Yeah,
the builder's not taking the hit on that. So those things don't intrigue me. Those things don't make me excited about investing, right?
But dude, like even then with the incentives, like let's even list out like what kind of stuff. Like they were giving you cars, they're giving you Rolexes, they're saying free property management. You don't have to pay the condo fees.
Rental guarantees.
Rental guarantees. And the rental guarantees were extremely high, man. Like we wouldn't even believe it. Like what, $500,000 more than whatever the market value was. They were guaranteeing it. But like to your point, dude, they give you $1,000 more than the market value for that unit, and they guarantee it for 2 years, dude. They're out 24 G's, but like that's nothing to them when they're selling you a unit that they got so much margin in, and they've already jacked up the price.
Everything looks good on paper when you see it like that, but when you actually break down the numbers, which we do pretty regularly, some of these things just don't make sense. And we talked about incentives a lot recently, and to me, the best incentive is the best price.
Sure.
Honestly.
I'd rather go to them. And I think that what we're talking about right now is like you actually have leverage to go to these builders that want to sell out their buildings, their developments and whatever else like that. I would basically take all the incentives that they're willing to give me and put a cash value to it and basically say, take this off the price. I don't want any of this stuff.
I agree 100% because at the end of the day, whether I'm buying for myself, whether I'm buying for an investment, I want to get in at the best price possible. And in the past 2 years, you know, I've done quite a few pre-con deals over the years. And in the last 2 to 3 years, it was very hard for me to sell pre-con to clients.
There's no value.
You
just can't see the value.
It makes no sense to me, right? There was no value. And how can I genuinely talk to somebody and tell them, hey, I think it's worth paying $100,000 more for this unit than resale? Don't worry, you'll make your money back in the next 3 years.
It's hard.
I can't guarantee that.
No, that's a hard pill to swallow.
So go ahead.
Like I was going to say, like even if we look at that right now, right? Like at a high level, we kind of understand what the numbers are, right? And let's just talk about Pickering condos right now. So if we looked at those buildings that were at 1215, 1235 Bailey at Liverpool and Liverpool and Bailey, we saw like one bedrooms there trade with parking and locker for like around $450,000, right? And then if you move over to Universal City, where they have like the third building that's closing right now, and a lot of these units are starting to come up on the market. Well, for that same kind of 450, you're getting a one bedroom without parking, right? And then if you move out to like say the newer buildings that are coming up, and some of them that come to mind are like 1515 Pickering Parkway, PCC. There's that other Highmark, I think, building there. So if you look at some of these guys, you're looking at what, a one bedroom with parking, if they sell you the parking. At what? You're looking at that for like what, 575
I think you're looking at a 1+1 around 575
with parking?
with parking.
Yeah.
Yeah, which is not that bad off of resale right now.
So now if we look at the gap, right, and we say, okay, like you could buy, like let's even look at 1+10. So if you buy a 1+1, like as a resale, you're going to pretty much pay what, like 575, $600,000 ish for that?
If you're buying a 1+10 with a parking spot resale in Pickering right now with a condo that's 1, 2, or 3 years old, you're gonna pay somewhere between, let's say, 525 to 565.
Okay.
Yeah. So we're at about a $30,000 to $40,000 gap on average between resale to pre-construction.
So to boil all of this down, like if somebody was still to say, hey, pre-con, like who does pre-con actually make sense for at this point right now?
Right now, pre-con makes sense most for the person who wants to live there. For the person who...
End user.
The end user who wants to, you know what, I want to spread out my down payment, my deposit over the next 2 to 3 years.
They don't have the money to put
They don't
up.
have the money up front, but that's one of the benefits of pre-con. You know, people always talk about what are the benefits of pre-con. I mean, there's two main benefits. Number one is you don't have to lock in a mortgage for the next 3 to 4 years, so you can keep working towards that. And number two, it's a deposit structure. Most people don't want to put down 20% today, but when you tell them that you can spread it out over the next 24 to 36 months, it becomes a lot more realistic for them.
Sure.
So I think that's the main reason people jump into pre-con is to kind of get that flexibility over there. So for the end users, definitely, because it depends where you're going, right? Like you have to believe in the lifestyle. Like when we talk about PCC, we talk about a very big development change that's happening there.
Yeah, it's going to be massive. Like
they
they bought the entire mall.
They bought the entire mall. They changed the name. It's called it's called Shops at Pickering now. They have some new stores coming in as well. You're right beside the GO train. You're right beside the highway. Like I think
it's
an
own
ideal
master
location.
plan community.
It's its own master plan community. Like the dream of mine is that it turns out something like what happened in Mississauga with the city center. That would be ideal.
You know what? Like despite of what's happening with PCC, like I bought into it. I still believe that it is, and you know, it's a long-term perspective of what's going to end up happening in that area. For me, I did it as kind of an investment, but I have an end use for it at the same time. So again, it goes back to utility. Like, what are you actually going to do with this? Like, I don't see myself really moving out of Pickering. I know I've thrown out Texas and this and that, but like, either way, even if I move somewhere else, like I'm gonna want a spot, right? I have a lot of ties back to this area.
You stopped talking about Florida ever since the hurricanes kicked in.
Exactly, yeah. But you know what? Ultimately, I have a lot of ties back to this area, and like I have an end use for that thing, right? Like even if I rent it out for a bit, but I will have an end use for it. So the utility is there for it, and just like what you're saying is for the end users, it actually probably makes sense, and maybe for some other people too, man. It's like again, end users, but like say for example, like you have a house here in Pickering right now and you're in your 50s or whatever else like that, like you're gonna have to start to think forward and say, hey, am I actually gonna keep this house, or does it make sense for me to actually buy a nice condo right now? And then you know what, it might be ready in 3 years or 4 years right now. I'll rent it out for a bit, but then at least I know I have a spot to go to, like secured it right now. Because I think it's hard to believe right now that in the next 10 years, like there is a chance that real estate could double again. Like we've seen it happen in 7 years, in 10 years, in 15 years it could double. So if you're able to buy like a 2-bedroom right now over there, like I don't know what it would cost you, like $750,000, $700,000, something else like that. Is it impossible to say that it's going to be worth $1 million or $1.1 million at that time?
I think based on what we've seen in the market, nothing's impossible. Right? I mean, we've seen houses go from $300,000 to $600K. When they hit $600K, people thought that, hey, this is crazy. But those $600,000 houses now are sitting at $1.5 million. Who would have thought they would have reached this point? When it comes to pre-construction, especially right now we're talking about Pickering City Center area, number one, 100%, it's ideal for the end user. And like you said, for people who are kind of older and they need to start looking at an exit plan, where are we going to go next? Do we want to downsize? Where do we want to kind of end things or kind of retire at, whatever the case is. But I also see a vision here for investors, okay? And I know we talked about right off the bat, it doesn't look like a great opportunity for investors. And not just this, we're talking about any pre-construction.
Any kind of resale at this point, even right now,
any real estate,
right? Like it's hard to swallow that unless you have like 2 units.
But then what I'd say is when you take a project like this and you have a 10-year plan, and I've talked to people about the 10-year plan, and I've actually gone through the numbers with them on a 10-year plan at a very minimal risk, meaning very low appreciation over the next 10 years, it's still a win.
It's still worth it. When you
Yeah.
talk about like paying down the mortgage, you
Yeah.
talk about like the appreciation at a minimum level that you can get, it's still a bet. But you know what? I think that's also going to take some time for these investors to realize that you're not going to get a 15% return year over year or a 10% return over year. It's going to be 3.5.
But I think investors need to understand that a 15 or 20% return year over year, that was an outlier.
So there you go. You remember what I was talking about, the fake investor?
Yeah.
Those are the people that I think are still going to be wanting that, and they'll miss out on some of these opportunities. I think the real investors will come back at it, right? They'll be like, you know what, it makes sense. Like, I'm going to hold an asset. I'm going to get 3, 4, 5% year over year, and I have a chance that it's actually going to go up. And at the end of the day, I have some kind of a product.
If you go with that mindset as an investor, I don't think you can lose.
No.
And we never preach, hey, buy and flip.
Yeah.
We know that if you hold something for 10 years, 11 years, 12 years, whatever the case is, there's a very strong chance that you're going to win.
Yeah.
And we're going to continue to preach that because that is the safest way to invest in real estate.
And you know what, even adding to this is like, why do you even want to do this for 10 years, 15 years, 20 years? Do you know what I mean? I think at the end game is that so you have cash or you have cash flow or something. Like I'm thinking about like even your retirement. And I think the more I talk to people, I don't think I talk to a lot of people my age. I'm in my 40s now, early 40s. And I don't see a lot of people that I'm talking to at my age that want to work until they're 65 or 70 years old.
Yeah.
A lot of people I talk to want to be done at 50 or 55.
Everybody's chasing freedom 55. That's what I've noticed.
100%, man. So how are you actually going to get there?
And there's two things I always hear about. Number one is side hustle.
Yeah.
Right? Everybody wants a side hustle, especially with social media, internet. There's so many e-commerce guys, this and that, whatever the case is, crypto. But what's the foolproof way to do it?
It's real estate.
It's real estate.
It's real estate. Yeah, I think so. I mean, you could argue stock market as well. I'm sure Chris can argue stock market, but I just don't feel comfortable about it because I don't understand enough. And maybe other people that do may feel more comfortable with that. I guess the point is to do something. And I think real estate over the long period of time is still going to be a very safe bet.
Yeah.
And I think that to wrap it up almost, is that we are starting to see these deals come back through the builder, right? And maybe, I'm just putting it out there, maybe whatever you're seeing on paper is not the bottom line.
Yeah.
Right?
So I haven't reached out directly to clients in the past few years to try to get them to buy pre-construction.
Yeah.
Okay, there might have been one or two odd projects that looked okay, so we've had the discussions, but for the most part, no. In the past 3 to 4 months, I've seen things that I've actually reached out to people to talk about. And that I only did that because I feel confident in the numbers. Yeah. And we might not be quite there yet, but we're getting very close to that time where I think builders are going to start bridging the gap more and more.
They're going to have to.
They're going to have to.
They're going to have
right?
to. Yeah. And again, I think it'll start to make more sense as the cost of goods are starting to come back down after a COVID hype. So we're starting to see some of that stuff. We're starting to see labor prices come back down because there are more people that are unemployed at this point, right?
Yeah.
So all of this is going to help them kind of bridge that gap between what resale is and what new construction is going to be.
Yeah, agreed.
Yeah.
Yeah.
Cool.
Yeah.
So you still think investment could be a good bet as long as you get into the right project?
I think investment is a good bet if you get into the right project and you have a long-term mindset.
Yeah.
I'm not preaching any sort of short-term real estate investment. I think that if prices jump in the next 2, 3, 4 years, great. If there's an exit strategy and you see a 20% or 25% jump, if it makes sense, exit.
Yeah.
But that shouldn't be the plan going in.
Yeah, exactly.
That's the way I see it. The plan going in should be you're going to close on this unit, you're going to hold it for 10 years, and you're going to reap the returns. Yeah. If anything happens along the way to accelerate that, great, that's gravy, right? But that shouldn't be the plan going in.
Dude, even as we're talking about this, like another thing I thought about is, and I've seen people utilize this in this kind of way is that, they have a 10-year plan and that condo goes up a bunch of money, right? Like it appreciates and you're paying down the mortgage at the same time. And guess what? Your house, you may not want to leave your house, but what ends up happening? They sell the condo and they pay off the balance of their house.
There you go.
You know what I mean? So there's a couple of different exit strategies and how to ultimately, I want people to invest to improve their lifestyle. It's not, I don't see value anymore in trying to build the biggest nut anymore. Do you know what I mean? It just doesn't make sense. What are you going to do with it at the end of the day?
And I think the lifestyle, you just touched on it for the first time. And I think that's one of the most important things that we fail to see a lot of the times. Because at the end of the day, if somebody has the money and they want to invest it into real estate or whatever the case is, one of the barriers that they have is, how is that going to affect my lifestyle?
Yeah.
Like, do I want to continue going out every night to a restaurant? Do I want to continue going on a bi-monthly vacation? Because people are living that life. But now if I put that money into investment vehicles, I'm going to have to sacrifice these things. Is that worth it to me right now or not?
Dude, I look at it as, it's like you're gonna give it up right now, but you're gonna be able to do something that a lot of people are not gonna be able to do afterwards if you can give up that right now.
Yeah.
I kind of like to reference myself in that. Like, it's like, since I was like, pretty young, and even like I can recall like 16, 17, like doing things that you wouldn't normally do as a 16, 17-year-old, like putting in that grind. Even when I bought that first place when I was 21, people around me were like, why are you buying a condo? It doesn't make any sense. But you talk to the same people right now, they're just like, holy shit. Like,
we wish we bought a
condo.
condo.
Like, look at what you're doing. I was just, but it's long-term investment. And I tell people, we do good in the real estate business that we're in. But a lot of the stuff I'm able to do is because of the early investments. Like 20 years ago is when I started investing, right? So over the course of 20 years, you're able to do things that people may not necessarily be able to do.
You know what, man, Hussein, at the end of the day, the part that it just really intrigues me is the fact that, when everybody is hungry to get into real estate, it's like a fire. Everybody wants it. At times like this, when the market is very leveled and slow, everybody's also waiting, thinking that it's going to keep coming down.
Dude, this is where the opportunity lies. And I'm not saying to pick up the first unit and not do any research and you're going to have a home run on the first thing that you pick up. But this is the time where you can actually do some research. You can think clearly and buy that right piece.
And as long as you're going
long term.
As long as you're going with the right plan. You're going to be okay. As long as you're going with the right long-term plan that we keep talking about, I think you're going to end up in a position where you're going to thank yourself in the future. For sure.
Exactly. If you guys want to know the projects that we've pre-vetted and we believe in, click the link below, fill out the form, and we will send you the projects that we believe in. All right, guys, so this was a little banter between Bakar and I about like pre-con, because we've been talking a lot about it at the office. We run a lot of numbers through spreadsheets and whatnot. We've actually taken a look at a lot of the projects that are, especially kind of around the Durham area, whether it be townhouses or detached properties and even condos. We've ran a lot of these numbers, got in touch with a lot of these builders, and we've kind of figured out some stuff. Maybe they haven't confirmed it with us, but based on our knowledge and the numbers that we're running, we feel like there's a lot of wiggle room in some of these units, okay? So if this has resonated with you guys, this conversation, and you're thinking about your future and you're thinking that, hey, like, I get it, I'm not gonna make 10, 15% year over year, and it's gonna be a slow and steady gain, which is what real estate is supposed to be, guys. So let's not get that blurred. If this interests you, and you're thinking about, hey, what is that project that would make sense for me? Or if you're a first-time buyer, just thinking that, hey, I don't have all the money to put down, but I want to commit myself to something. And maybe you want to commit yourself to something, and it's a strategy I still use to this day. I started using it 20 years ago. I still use it to this day. I commit to things that I cannot afford right now, but I force myself into doing it. Like the house that we're sitting in right now, like you asked people around me, there was no chance that this was gonna happen. I didn't have the money to do it, but I forced myself. And even in 2023, where the real estate market wasn't doing as good, like I had that energy behind me and it made it happen because I had a big ass goal that I needed to kind of solve. So if you're in that situation as well and you're like, when am I ever going to become a homeowner? You gotta like make these commitments, I would say. So you're going to be on a disciplined plan. Like if your $15,000 payment is coming out like every 60 days or every 90 days, like you better make sure you have the money. So this might actually give you a kick in the butt a little bit to say, hey, I got to get a little bit more disciplined. And a lot of people that we've put onto these programs are so happy they've done it. Is it painful during the time? 100%, it's painful. But once you get through it and you've made your deposit and you're kind of there with your 20 points down and you're just waiting another 2 years for this project to be done, you're going to be in a really good spot.
Yeah, I agree.
Perfect. So if you guys want information on these projects that we've kind of eyeballed, that we're kind of thinking are good, decent projects, we're happy to share that information with you. So shoot us a DM, send us an email, give us a call, and we'll be happy to share that information with you guys. Until next time, guys, remember one thing, get Cabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.